So, what is financial management? Why is it so important? And why should you learn how to manage an organization's finance? Financial management is the efficient sourcing and use of financial resources to ensure the objectives of the organization are achieved. It includes both short and long-term sources of finance and short and long-term objectives. The purpose of financial management is to create wealth for the business and its shareholders, generate income, and provide an adequate return on investment when taking the risks into account. It involves decision-making in the following key areas: investment decisions on projects that are long-term investments in non-current assets, for example, like a factory, and short-term investments in working capital, for example, ideas for reducing debtor days and increasing cash available. Finance decisions on where the money's needed to run the organization, so the working capital, and to invest in projects can be sourced. The impact and risk of gearing must be considered when making financial decisions. Dividend decisions need to be made about how shareholder wealth should be increased through a high dividend or by reinvesting cash funds and increasing the value of the shareholders' shares. The financial impact of these decisions on the company value must be considered. Risk management in the company. This area examines the financial risk from exchange rates and interest rate risks.